Hi everyone, welcome to Money Page, where we decode the mindset of money. In this video, we are going to be looking at a type of investment that we are going to add to our investment portfolio so that we can continue to grow our wealth. The type of investment we are going to be looking at is one of the money market instruments called commercial paper. If you have not heard of this instrument before, do not worry, because in this video I'm going to explain everything you need to know about commercial paper before you invest in it. However, before I continue, I would like to disclaim at this moment that this video is for information and educational purpose only. It is not a financial advice. If you must act on any information you are going to get from this video today, please do not forget to speak to your financial advisor before you do so. Now let's get into the video properly. Wait for a moment. If you are not subscribed to my channel, please try and do so. It is not going to take you anything. It is free for you to just click that notification button so that whenever I drop a video of this kind, you will be among the first people to see it. And also do not forget to like and share to everyone that you feel they need to start investing. As I said, we are going to be looking at commercial paper, but we are going to take that name commercial paper and abbreviate it to be CP. C for commercial, P for paper, so that instead of us to continue to be repeating commercial paper, we just say CP. Now at the end of this video, I would also like you to put it on the comment section how many times I mention the word CP. Counting from this moment, how many times I mention the word CP, so that I will actually know that you watch this video. If you are able to give me the number of times I mention the word CP, there will be a gift for you. Thank you. Let's move further. Now, what is commercial paper? Now, before I begin to define what is commercial paper, have you heard of this money market instrument called Treasury bill? If you are heard of this type of investment, this video is going to be more simpler for you to understand. Before I define what is commercial paper, let me quickly tell you about Treasury bill. Treasury bill is a money market instrument that is being issued by federal government of a country to borrow money from member of the public on a short-term basis. That is Treasury bill. It is being issued by federal government to borrow money from member of the public in order for them to be able to use that money to carry out some certain projects in the society. But when it comes to CP, which is commercial paper, let me repeat it again so that you will not be thinking what is CP. I know I have mentioned it before that we are going to be calling commercial paper in this video CP for short. Now, when it comes to CP, it works the same way like Treasury bill. The difference between the two of them is that Treasury bill is being issued by federal government, while CP is being issued by a large corporate organization. In other words, CP is the corporate equivalent of Treasury bill. It works the same way Treasury bill works. Another slight difference between them is on the risk aspect of it. For the Treasury bill, the risk involved in it is likely not going to happen because Treasury bill is described as a risk-free investment. When it comes to a commercial paper, that is CP, because it is not a government of a country that is issuing it out, it is a corporate organization, that is private individual organizations that are issuing it at, it is going to carry an element of risk. the two has the same purpose. The federal government use TB to borrow money from members of the public to carry out some certain projects in the society, while a large corporate organization use CP to borrow money from members of the public to carry out some projects in their company. When a large company issue a CP to members of the public to subscribe to it, they are directly borrowing money from a member of the public for them to use in expanding or running their organization. It is a short-term money instrument that large corporate organizations use in borrowing money from members of the public. That is the simple meaning of CP. Now we are going to be looking at some of the features of CP. The number one feature of CP is it is a money market instrument. A money market instrument are those instruments that are highly liquid in terms of converting that instrument back to cash. They are always highly liquid. That is why they are called money market instrument. Another feature of CP is that it's a short-term duration instrument. It does not take a very long time for you to get your money back from the investment. When you invest in CP, it will only take a period of 3 months to 1 year. You will recover back the capital you invest in that business. The third feature is that it does not carry interest rate. Then if it does not carry interest rate, how do I make profit, or how do I make a gain, or what will be my return? How do I determine my return? Now CP does not carry interest rate, rather it carry what is called discount rate. There's difference between discount rate and interest rate. Let me quickly explain the difference between the two. When you talk about interest rate is being applied on amount that you are investing, and you will not determine the interest you are going to receive at the end of that investment. While discount rate will be applied on the amount you are investing, and you will get your return immediately. You don't have to wait till the end of that investment before you receive your return. In other words, the amount you are investing, you discount it from the future to now. For instance, if you invest 100,000 at a discount rate of 10%, when the 10% is applied on that 100,000, it will be 10,000 naira. Instead of you to wait till the end of the investment period for you to take your 100,000 and the interest together, you will immediately collect your 10,000 naira while you wait till the end of the investment before you collect the remaining 100,000. That is how a discount rate operates. By the time we begin to explain with figure, you are going to see it clearly. Those are the three major features of commercial paper. The fourth one is commercial paper are being issued by majorly large corporate organizations. Do not forget this, that commercial paper is usually issued out by larger corporate organizations. This is one of the way you scrutinize the type of commercial paper you are going to invest in. You don't just invest in any commercial paper. By the time we go further, I'm going to give you the way you can scrutinize the type of CP you can invest in so that your capital will be more secure. Now, let's take this example for our CP so that you will understand it more better. Say for instance, if I come to you to ask you for 100,000 naira for me to continue to expand my business, definitely you are going to ask me what is going to be your own gain, profit, or return, because you are not going to give me that money free. Then we are going to agree on the return I'm going to give you for you to give me the 100,000. If, for instance, we agree on 10%, and the 10% of 100,000 is 10,000 naira. Now, I'm going to be owing you a total amount of 110,000 naira. That is the 100,000 naira I'm borrowing from you and the 10,000 naira gain you are supposed to gain from that 100,000 you are giving me. The total amount that is now with me to return to you at the end of the duration we are going to agree on is going to be 110,000. Now, if it is a CP that I'm issuing to you, then immediately I will have to give you that 10,000. Why I will now be owing you 100,000. Do not forget, both your return, which is 10,000 naira, and the total capital you are investing in that CP will be 110,000. But immediately I'm giving you back 10,000, meaning the remaining amount I'm owing you is going to be 100,000. That is one of the beautiful things about CP. You receive your return immediately. As I said earlier, CP carry an element of risk. The only way to avoid the risk in CP is to ensure that the CP is being issued by a large organization that have been in an existence for a very long time, and also an organization that has a good credit rating. Take for instance, a Dangote group of company is issuing that a CP. You are going to see these three characteristics I just mentioned. Dangote is a very large corporate organization. Dangote has been in an existence for a very long period of time. The third one is Dangote also has a good credit rating. These are some of the things that you will put into consideration before investing in CP. Now, why do I say we need to add CP to our investment portfolio? The very good reason why I say we should add CP to our investment portfolio is because of that immediate return that we will receive as at the day we are investing in it, because we can take advantage of receiving that return immediately, and that return we reinvest it in another safe money market instrument like money market mutual fund, so that return that you gain from CP will continue to generate another income for you before the maturity of that CP. Now let's explain further with real figure to see how that will work. We are going to be looking at two types of investment. Which one of it will be CP, that is commercial paper? We'll look at that. Then we'll look at another type of investment, which it can also be a money market instrument type of investment. Take for instance, we are going to be looking at investment in CP and investment in fixed deposit for a duration of just 1 year. We'll compare the return from both at the end if we apply some other strategies in those investments. Now, the first is, let's look at investment in fixed deposit. If for instance you have 5 million naira to invest in a fixed deposit, and the interest rates for a duration of 1 year for 5 million naira in a fixed deposit is 20%. That is going to give you 1 million naira at the end of 1 year. That your return, your profit, your gain, whichever way you want to call it, is going to be 1 million naira. But you should know that you can only receive this your 1 million naira return at the end of the duration of that investment, meaning at the end of 1 year you are going to have 6 million naira, both your capital and your gain from fixed deposit. Now let's come to CP. If you also invest 5 million naira in CP for a duration of 1 year and the discount rate you are giving is 20%. Now when it is being discounted immediately you invest that 5 million naira, you will receive 1 million naira. Then at the end you are going to be giving back your 5 million naira. When you add your 5 million naira to the 1 million naira you receive immediately the day you invest in that CP, it is going to be the same 6 million you also receive from fixed deposit. Now here's come the difference why CP is more beautiful compared to fixed deposit, apart from the risk aspect. Now if you are giving 1 million naira return immediately, you can take this 1 million naira and look for another money market fund that is very safe, like money market mutual fund. And if you invest this 1 million naira in that fund, you are at the end of 1 year, you are going to receive another income from that 1 million. But meanwhile, do not forget, in a fixed deposit, your 1 million naira interest will only be paid to you at the end of the duration of that fixed deposit. But in CP, the 1 million naira was paid to you immediately. It is this 1 million naira you will take to invest in money market mutual fund. Say for instance, you are able to secure an interest rate of 15% in money market mutual fund. The 15% at the end of the year is going to give you 150,000 naira. 150,000 naira at the end of the year, and you add it to the 1 million you invested in the money market mutual fund, you are going to get 1,150,000. While your CP also mature at the end of that year, the total amount you are going to have is going to be 6,150,000 naira. While the counterpart investment, that is the fixed deposit, will only turn out to become 6 million. By investing in CP, you have gained extra 150,000 naira. This is how you can take advantage of some certain investment to grow your money fast. These are some of the way. As you can see, it is a very good strategy. And when you are thinking about investment, always think of better strategies that you can use to grow your money. But we are not looking at a high risk investment that you put your money to quickly grow it. That is not what I'm saying. I'm saying look at strategies that can help you to grow your money fast without you losing your money. Commercial paper is a money market instrument that is having a low risk. If you are able to scrutinize that company that is issuing that commercial paper, like as I said earlier, how do you know the type of commercial paper that is safe for you to invest in? Is by looking at the antecedent of that organization that is issuing that commercial paper. We said you should look at how large is this company in terms of their capital base. We also look at in terms of their capital base, their assets base, how large are they. Then you also look at how long are they been in existence. Is it a company that is just coming up today, or it has been in existence for a very long time? You know that for a company to have been in an existence for a very long time, they have passed through so many hurdles of business operations. They have known so many things about business. They know the up and downs about business. They are now a master in that business. And again, you should also look at the credit rating. How many times have this organization issued out commercial paper that they always pay back, or are they owing so many people and they are not paying back as at when due? You can find this in their balance sheet. You know, those are some of the way you look at the commercial paper you are going to invest in. Look out for that great company that is issuing out commercial paper right now so that you can invest in it. Thank you for watching. I hope the information in this video help you, and do not forget to subscribe and like, share to your loved ones. See you in my next video. Bye.